Hello, friends. What it pays to wait before buying some US shares? Sea Limited, Sofitech, Alibaba, Grab, or more? Past prices don't really matter now. Look at the present. Remember what I tweeted. We're seeing Bitcoin testing below 34k USD, but it's now back above 40k USD. It's a relatively safer and positive sign, though not all are safe right now. Now is the period where stock selections becomes even more important, which explains why I decided to share with you, my viewers, a more individual stocks review pursuant to their quarterly results announcement. We're seeing Alibaba US shares trading relatively weak after its 4Q 2021 results announcement. Netease US shares seem stronger after hitting slightly below 88 USD and has now rebounded to around 94 USD. And it's definitely worth a look to have a quick look of its results. Sea Limited, on the other hand, tanked over 30% after it reported its 4Q 2021 results on 1st March, which may signal that downward pressure on this stock may still persist for the time being. So did Grab, which did badly and is struggling to hold above the 5 USD mark. I've seen people being very positive talking about Grab Super App, but look at what is happening with C share price after its results. C continue to exhibit weakness after showing fantastic year-on-year growth in terms of revenue. Do you remember this slide that I did after looking at 3Q 2021 results for Grab, Coupons, and Sea Limited? Grab has the smallest revenue number on a quarterly basis, and what's worse is it's being highly negative in terms of EBITDA margin. So I do expect it to be showing the same or if not worse EBITDA loss this quarter in 4Q. So why rush into it? For myself, I will stay away from Grab. If you remember what I tweeted on Twitter, where I talked about diverging in stock prices for US tech will appear even clearer by end of 4Q 2021 results announcement, it really pays to wait than rushing to acquire certain US listed stocks, be it Chinese or US tech stocks. You look at Upstart share price, which went up after a result announcement, whereas you compare Sea Limited, which show weakness after its results announcement, and it's now at 126 USD. We should know that revenue growth is not the sole indicator for strong share price given Sea Limited recent price performance. Look, what did Sea Limited perform? 110 increase in terms of year-on-year revenue growth. But so what? Sea Limited cash cow digital entertainment division seems to be facing some slowdown in terms of users number. You see here. So it definitely doesn't help in terms of its cash flow. Of course, we see that the gross order, gross merchandise value of Sea Limited e-commerce division is still growing nicely. Year-on-year, 53% growth, year-on-year, 90% growth for gross order. You should have realized by now that markets are getting increasingly demanding. No one's know for sure how the price is going to react for US tech stocks. Will we ever see share price falling below 100 USD? With EBITDA losses growing for a negative 167 million USD in 3Q 2021. But now it's falling to an EBITDA loss of negative 500 million USD, a significant 3x jump in terms of EBITDA loss. The pressure on downside will not go away so fast in the near term. If we take a step back and look at Netease performance, Netease seems to perform better with its focus more on entertainment like gaming, where you see it's growing 23% year-on-year and 10% quarter-on-quarter. I will consider Netease as a stake in my portfolio if I do not already have a significant block of Chinese tech stocks in my portfolio. A lot of the people like Alibaba, there's daily journal which Charlie Mungers owns a very small equity stake, a very small portion of his entire net worth owns Alibaba. But so what? Given that Alibaba has slower growth compared to Sea Limited, Amazon, etc., do we really want to consider a stake in Alibaba when there are so many other better stocks in terms of potential price performance? Look, a 10% year-on-year growth doesn't seem to warrant such a PE multiple of over 20x. Yes, US stocks may be trading more, but income from operations for Alibaba, you see, dipped 86% year-on-year. Does it warrant a red flag? At least it's to me, so I wouldn't touch Alibaba. Viewers on my YouTube channel will know that I've always been advocating that there are other better Chinese tech stocks to consider with Netease and Tiger Brokers for consideration. I personally own Tiger Brokers. Recent price low of 100 USD does seem to imply there's always a possibility for Alibaba to step down in terms of price performance to break 100 USD. One might as well reassess Alibaba only when the next quarterly results are out. I'm personally not surprised if Alibaba touches around 80 USD. There will be more accommodative monetary policy in China, including lower rates, slightly more favorable mortgage lending conditions in China in March and going to 2Q 2022 for China. All in all, further rate cuts will be made, I think, after Federal Reserve decide to rate hike in March this year. So right now, unless there are really very strong signals and strong corporate results performance, there's really no need to rush to buy US tech stocks. Selective purchase for Chinese tech stocks should also be made if general price weakness prevails and we have good situational bets to acquire Chinese tech stocks. For me, this is my explanation why I will stay out of Palantir, with the reasons shared that the situation that there's lower margin already clearly signal that there's increasing competition. There's no need to rush to acquire Palantir. Wait and see if it ever touches the 5 USD mark. For Lemonade, you know my view, higher loss ratio in terms of gross and net reaching 90% compared to the last 2 quarters, 70+% may signal that there's potentially some issues with their AI algorithms. Why should we rush? Current pricing, given the performance recently, does signal that it's better to wait so as to manage one risk rather to jump into it. I will only reassess Lemonade if it hits below 10 USD. Will it be a turnaround situation bet? For me, I'd rather wait. As always, this should not be construed as any investment or trading advice.